Good morning, everyone. Welcome back to those that had joined us right at 8, and I hope you got a chance to get a coffee. My name is Jill McDonald. I'm the Executive Director with the Saskatchewan Barley Development Commission and co-chair of our CropSphere AGM committee this year. I just wanted to do a few housekeeping notes for our sessions this morning. I wanted to remind everyone that there is a question period at the end of this session. And if you were to you want to ask a question, please use the raise hand function located at the bottom of your Zoom window. So permission will be given in the order in which requests are received, and then you will have the opportunity to ask your question live over the webinar. So I hope we don't run into too many technical glitches this morning, but feel free to reach out to our technical support staff on the webinar. I think if you are having technical difficulties, I also think you can put a question in the Q&A as well. So please feel free to reach out to us when you can. Our Market Outlook session this morning will be presented by Marlena Borsch from Mercantile Consulting and Chuck Penner from Left Field Commodity Research. From international movement and demand to local production numbers, Marlena and Chuck will provide the latest market demand and outlooks for canola, wheat, and barley this morning. So please join me in welcoming Marlena Borsch and Chuck Penner.
So I hope my share screening is working for everyone, and I welcome you to our first Market Outlook session this morning. It's with great pleasure to be at the Crop Production Week this year, and obviously we are having a different kind of a meeting than we normally have, and I must say that personally I really quite like having the personal contact, because you can kind of feel the dynamics going on in the markets, but we'll have to do it differently this year, and I hope you will still be able to take a lot of information back home with you. I'm not quite sure if my share screen is actually working as I meant to do. Chuck is shaking his head. And we practiced this just the other day, and I'm not quite sure why it isn't. So let me do it again. So.
So Marlene, I think you've selected the wrong screen, because I'm seeing there you go. We're good now.
Yeah, and I'm not quite sure how that happened, but here we go. And it's the way it's actually displaying still strangely on my own screen, but here we go. So let's start with the Market Outlook session. And as you all know, we are having extraordinarily interesting markets this year. And I just would like to take you back for a second into August, July and August, when we were all very worried about prices and markets. And we're seeing an extraordinarily big move upwards. And we will try to examine why that is so, and what it means really to the Canadian crops. So we'll start with canola, and before we delve into canola itself, we'll take a small detour to the world of oilseeds, as I call it, because obviously some of the bigger crops than rapeseed set the stage, and they help it explain what's happening on the canola market, and then we'll see what it's doing to values in Canada, and share some ideas on where the next sales should be in our opinion, and some thoughts about new crop. And then we'll switch into wheat and do a similar thing with wheat. If you have watched my Market Outlook sessions before, you know that I like talking about the outside markets to set the stage. And these are the markets that are actually not strictly agricultural, but that affect our markets. But I will keep that to maybe 3 slides this year because of the time restrictions. And we will just quickly talk about the COVID effect on demand, about our rail capacity this year, and mention foreign exchange values because they're also influencing prices for commodities across the world. So the COVID effect on demand. I'm one of the people who said in the summertime, after we had started COVID, and we're now almost a year into it, that if you restrict commercial activity and reduce incomes of peoples in general, it has a negative effect on demand. And when you look at the list of commodities I have here, particularly the majors, and the current forecast for demand for the 2021 consumption, you see that we're at record levels on almost all of them, and if not at record levels, so fairly close to them, which I find absolutely extraordinary. And the reason for that is the recovery in China, because some of that, especially in oilseed, is China driven. And also we have learned that the subsidies given around the world actually, in some cases, have even bolstered income rather than, experiencing a reduction. And so as we went into the fall, we learned that in spite of COVID, we are seeing extraordinarily good demand. And we'll have to see if that continues into the next year of this experience. But it is really, the numbers are really quite stunning as you go through them. Anything from coarse grains, feed grains, wheat, barley, oil seeds, it has been very, very good. In Canada specifically, we have also had support by increased rail capacity, and the low prices for oil and lessened demand for crude oil and also for coal have meant that there's more capacity for agricultural production to move into the export markets. And really the little box on the right-hand side, if you can see my pointer there, summarizes it very, very nicely. Year to date, that's into week 22 of the 52-year crop year, we have moved 6 million tons more grain into the bulk markets compared to last year. That's a 33% increase, which is absolutely stunning. And if you really think about it, it means that US farmers have sold 6 million tons more grain, converted that into money rather than having it sit into our bins. And it doubtlessly will have a very beneficial effect on the agricultural community as well. So that's a very, very big factor, very important factor to farmers this year. And it also puts you in a much different cash position than you sometimes are, at this time early in the new year. Again, the third one I just wanted to mention is the big changes in exchange values across the world. And I've just, because we talk about wheat later on, one example. And on the left-hand side, you see the foreign exchange effect on the Russian ruble. And if you take the Jan 1720, so a year ago value, you can see that just by pure exchange rate effect, we went from a 13,000 ruble per ton valuation of wheat to about 15,000 rubles by the middle of December. If you also include the effect on price that we have seen, and we went up, Russian wheat floor prices went from $226 last January to, I'm showing here December 17 at 257. We are now at 275. Forward values were sold yesterday. We went from about 14,600 rubles to about 19,000 rubles plus year to date. And so you can see what that does in people's thinking about valuing that commodity, and also when you think about comparing it to other commodities to grow for the coming year. And when we talk about pulses, I should mention that again as well, because it changes how many acres go into certain commodities. So big changes there. Canadian dollar, of course, has strengthened. But when we think about the world, again, there have been a lot of changes on that aspect. So again, on oilseeds, we'll talk about major oilseeds first, then ease into soybeans, and then talk about canola itself. I have some busy slides, as I tend to do sometimes, but I'm just trying to summarize what's happening to oilseed fundamentals. And when I talk about the general oilseed market, that includes soybeans, rapeseed, peanuts, sunflowers, cottonseed, copra, and palm, roughly in a ranking of size. And this slide kind of summarizes what's happening on the production side as well. Just a second, I'm not sure why there's no signal. There we go. What happened on the production side? And you can see that we have a 3% increase in production relative to the prior year. But if you compare it to the 18-19 year, it's still a 1% reduction for all oilseeds combined. When we go into the consumption side, you see we have a steady increase in global oilseed crush over the last number of years. And we are seeing a 1% minimum increase this year, and it's a 5% increase over the last 2 years. Also, in terms of imports, they have been going up, not steeply, but they have been going up steadily. And the net result is that we are seeing a fairly significant decrease in stocks expected by the end of the year. And as you know, we're expecting a new USDA report as we speak actually right now, and that will probably make that decline even steeper. So why do we talk about soybeans next? And here's a very quick slide showing you the relative importance of soybeans within the major oilseed pictures, and they comprise about 60% of production. So that's about 363 million tons compared to 69 to 70 million tons on rapeseed. So they're absolutely kind of the trendsetter. So on soybeans, again, a couple of slides trying to summarize what's happening to soybean fundamentals this year. And the various colored lines oriented to the left-hand axis, they show you the various producing countries dominated by Brazil in the blue line and the United States in yellow. And then you have China, Argentina, India, as some of the other producers shown as well. Oriented on the right-hand axis, I have summarized those productions to the total. So the red line you see in some of the slides coming up are the combination of all the various countries. And that gives you a better impression what happened to production volumes over the last while. And I would guess that the red line will actually sink down a little bit yet with what's happening in South America due to the dry conditions there. As I said, you know, today's report will probably change some of the yield and also the ending stock figures. As we move into some of the usage side, you can see in terms of exports, they have increased very significantly on the red line and the total from 149 million to 69 million tons. So demand has been very, very good, especially driven again by China, because the swine herd that was decimated by African swine flu has been regenerated, and the feed use is actually bigger than people have been expecting early in the crop year. On the oilseed side, obviously, we also have crush numbers, and the same story here. You see crush by the various countries listed on the left side, and then overall crush tonnage increase sloping up to the right, meaning it has been increasing fairly significantly. And that brings us really to the key slide when we talk about the oilseed market. And you can see how ending stock forecasts have tended to slope down. But I should put particular attention to the green line, which depicts the United States. And this is before today's report. And you can see that there's a very steep deterioration of stocks beyond the 16-17 levels. And you have to keep in mind that we monitor values by using the CBOT soybean values in the United States. So US stocks are actually extraordinarily more important than anybody else's, I would venture to say. And you can see that total stocks are sloping down fairly steeply as well. And that's what has feeding really the strength we have seen from November forward in the oilseeds market. And you know, if you remember that slide, it gives you a good solid footing as to what's really underlying that. So just to summarize that, when we look at global soybean supply and demand, what's important to understand is that the usage is bigger than the production over the last 2 years. And we're seeing a reduction in stocks. Stocks are falling. And as I said, that line will probably become a little bit steeper yet. So that's really what's happening in the oilseed market. So when we think about what's so different this year over last year in terms of the market behavior, it's really that. It's a reduction in ending stocks by minimum 10%, and especially reduction in the United States. And basically we have seen the supply-demand balance shift, and we are no longer a supply-driven market, we are actually a demand-driven market. So when we think about cash values of soybeans, here's a slide from before Christmas, and we can see that there has been a steady increase in FOB values in Argentina, Brazil, and the United States. These are Gulf values. And you know, if we extend that into early January, you know, we would be up here somewhere. That trend has only continued on. So in terms of the oilseed outlook, there is significant evidence, as the CBOT oilseed market tells us, that the US supplies are being used too fast and that pace cannot be maintained. That is driven by the swine herd expansion in China to a large extent. Also on the oil side, the vegetable oil demand has been very, very strong, and we're seeing diminishing supplies in palm oil stocks as well. They're at 13-year lows. So there's no reason to think that the strength in the veg oil market will change either. I would also add that a significant volume of US and Brazilian beans has been sold. And so there are really no people chomping on the bit trying to sell more product, which obviously also has an influence on the market. And we'll talk about that on the canola side a little bit as well. So as we go forward, really the question in today's report that we'll see later today is, you know, how USDA will handle the speed of exports and what effect that will have on the ending stocks. So with that background, we'll talk about canola and rapeseed in terms of a global content, and see you know, what that means for the Canadian usage. So again, you will talk about fundamentals and also about the shift in the Canadian export base and the pace of crush and exports in the canola markets. So this is a summary of the global rapeseed situation. And you can see on the left-hand side, production by origin. Canada, obviously, a very important factor in the global rapeseed market. Kind of on par or a little bit higher in terms of production in the European Union, followed by China, India, Australia, others, including the Ukraine. So you can see that in terms of production, it has been deteriorating over the last 3 years as well. We're looking at about 69 to 70 million tons produced globally. On the right-hand side, we try to marry that information with what the supply actually looks like and what we are expecting of ending stocks. So in terms of supply this year, we are looking at about 76 million tons. Still very, very good export demand. It's actually probably limited by supply. And you can see that ending stocks globally keep deteriorating, as you can see on the right-hand side there as well. Right there. Just before we continue on to the Canadian canola balance, I wanted to mention the importance of the high oil content, because as I mentioned earlier, the vegetable oil markets are very, very strong. And that's always beneficial to canola because it has a higher oil content than soybeans. And so high oil values tend to particularly drive good canola values as well. On this slide, I'm showing you the Agriculture and Agri-Food Canada canola balance sheet. It's their numbers. Our numbers are actually a little bit different. We're having a higher production number, but also use a slightly higher crush number and so on. And we'll talk about the variability in some of the estimates in a second. But it does give you a good summary as to what's happening. We are seeing, I think in terms of supply, most people agree on about 22 million ton supply. We're expecting exports between 10 and 10.5 million tons, depending who you talk to, and 10.2 million tons of crush. And we'll talk about those particular numbers. And you can see that carryout stocks for canola in Canada specifically are forecast to fall fairly significantly. This slide is a little bit confusing, and I put it up on purpose to talk a little bit about the AFC numbers. And you can see that there have been big variations in the estimates. And I find it's confusing to farmers because if you look at the AFC numbers in the fall, they tend to overestimate they tend to overestimate ending stocks. And last year was probably the gravest example, where they forecast 4.5 million ton ending stocks for the past crop year as late as October. And that might lead farmers into selling product too early. And so make sure that you scrutinize the numbers and make sure that you find some reliable numbers to make your decision onto that. And I'd really like to urge AFC and Stats Canada to do due diligence in order to help farmers making the correct decisions. I said earlier, most people agree that we have a supply of about 22 million tons. So to me, what's very important now in the second half of the crop year is really how is our utilization developing and what does that do to the remaining stocks. And as you can see on this slide, on the left-hand side, we have crush numbers compared to the last 3 years. The red line is the ongoing crop year 2021. And you can see that we are at record crush numbers. We just had the November numbers last Friday, and they're in excess of 900,000 tons again. If you annualize, meaning if you take the first third of the crop year and annualize it to the full crop year, we would be crushing 10.4 million tons. I don't think we will reach that number simply because we don't have enough seed, but we are using a 10.2 million crush for this ongoing crop year. And crushers have all the incentive to keep going and to keep utilizing their capacity because crush margins are in excess of $100 a ton still. So they will try and make those margins and make those incomes. On the right-hand side, you see canola imports, August to November by country. And we have had extraordinarily good year-to-date exports on canola. And when you split them by country, I circled 2 that I wanted to point out here. And one is China. So we see a big recovery in purchases of Canadian canola by China. They have bought 932,000 tons year to date or to the end of November. But then I really want to talk a little bit about this circle here, and it shows European Union imports, European Union countries combined, and they have imported from Canada year to date or to the end of November already in excess of 1 million tons. They're actually the single biggest importer of Canadian canola year to date. And we don't hear a lot of talk about that, but over the last 2 years, their imports have really, really risen. And last year, they were incredibly important to make up for the shortfall of exports into China. If you annualized exports to the end of November to the full crop year, that would actually give us 12.6 million tons, which is not possible because we don't have that much supply. So things will slow down a little bit. So on this slide, I'm just giving you some of the actual numbers on usage. Again, you know, we have shipped 4.2 million tons a year to date compared to 2.7 million tons last year to date. So, you know, to summarize the fundamentals, our supply is down relative to the previous year. Our exports are up significantly. They're up by 1.5 million tons year to date. Number one importer is the European Union. I circled them, you know, number one ranked there. And crush is a little bit behind last year's pace as crushers have trouble getting more seed. But overall usage is up by 1.2 million tons over last year. So you're seeing the supply demand tightening on canola. And here's another picture of the canola exports. Red line is this year's performance versus the last 3 years, kind of summarizing some of that data. I also wanted to show you a quick look at some of the European import stats. And you can see that this year's imports exceed last year's and any prior year in the recent history. And you can see we are way above 5-year average imports by the EU of Canadian rapeseed. Prices. Canola values and rapeseed values are not only strong in Canada, but also in Europe. These are farm values in euros in Germany, ex-farm prices compared to the last 2 years. And they have continued to go up into December and early January, as you can see here. And on the right-hand side, I'm showing ICE or Winnebago ICE canola futures. Yesterday, they closed at almost $673, which is absolutely phenomenal. The last similar high was $650 in April 2012 for Jan canola. Another picture for the March canola futures, and it just shows you, you know, how steep the increase in values has been driven by some of the fundamentals that we have just discussed. So when we think about canola, I think the futures, very high futures values are really cool. I think that's very, very supportive. But in showing you some of the soybean fundamentals, it's very important to look at how canola product values compare to those of soybeans. With that, I mean the meal and the oil. And canola is trading at a premium of soybeans, but it's about correct given the high oil seed, the high oil values that we are seeing in the markets. So we actually at a fairly comfortable level in spite of the steep increases. In terms of crush, we expect that to continue because of the good crush margins that we still have. And when you look at the crusher bits, you can see that crushers are probably covered into March, but April, May forward, they're looking for more product, and that's where you see the strong prices. And March, April, you know, that's where some of the very good opportunities start. In our company, we had sold earlier on in the markets because nobody could predict quite the strength, but we started at 12.80. January we sold. So those were already very good values. I said last week we're looking for $15, and I can tell you that $15 has traded in Saskatchewan already. $15 a bushel for canola are very, very good values, and probably are worth a look because if you look at how far we have already gone with price appreciation, it begs the questions how much further you can still go. And I think we'll see some, but you know that you will never market all of your product at the peak. So we are at some very, very profitable levels for canola right now. I already said crush margins in Canada continue to be excellent, and exports of canola to the European Union actually continues at pace. We don't see that slowing down. So we will need price rationing in this ongoing calendar year. Soybeans also looking potentially bullish. We'll review the report today, but we expect to see $15 a bushel there. So very strong fundamentals and very, very good values for canola. And I think for next year, we'll see somewhat of an increase in canola acres again, as is possible within the rotations that you have. So with that, we want to switch into cereals because already I've taken up a big chunk of the time. I'll need to hurry up a little bit. And we'll start with something similar in order to compare the two. So here you have the global wheat fundamentals shown here. And what I would point out is that wheat utilization and wheat production utilization is actually still below production. And although you can't tell in the market because of some of the other factors we'll talk about, closing stocks of wheat are actually not going down. And so, you know, what we're seeing in the market is very surprising. The stock levels are shown in blue here, and they will be slightly up or fairly flat. So it's a little bit of a different situation on wheat fundamentals, just isolated by themselves. And you saw that in more market variability. And in December before Christmas, when we had the previous WASDE report, we saw actually a bit of a reduction in values. Because people realized that the stocks were still more than last year's, but we also learned that global wheat consumption is at a record. So, you know, at the very first slide we showed you, we are looking at a record of 758 million tons. That stocks actually came down a little bit from the previous estimate. So when we try to compare the wheat situation this year versus last year, for us, it's very important that North American wheat has actually become much more competitive in the world markets. We are not much more expensive, or actually we are no longer, depending on what type of wheat you look at, more expensive than, for example, the Eastern European wheat. So our access to the market has improved. And our market share is actually improving, which is absolutely stellar. We're also having some political interference, if you want, in that Russia has established an export quota on wheat at 17.5 million tons and export taxes at 25 euros per ton. And currently there's a discussion, and that translates to about $30 per ton. There's a discussion to double that to 50 euros per ton because it's designed to actually lower prices inland for the domestic market in Russia. To keep bread prices down. That's what President Putin would like to achieve. And the first issue of export taxes hasn't achieved that. So we might actually see an increase on that, which I think will continue to be positive for other exporting nations of wheat. So while in December we had some negative news that needed to be digested, which was the bigger Australian crop, and I'll show you a picture of that. Compared to last year, they were at a little over 15 million tons, and this year 31.2 million tons. Our Canadian crop was bigger than initially thought. And there's also the threat of the Indian wheat into the export market. You know, since then, we are more preoccupied with some other concerns, and specifically the winter wheat condition in the European Union and in the Black Sea areas as well. And overlay that with some of the pressure by corn. And, you know, we were able to digest some of the news from earlier in December. So this is the picture of Australian production and exports. So you can see that this year there will be a much bigger factor in the market, which is, you know, what we digested in December. Wheat values in general have also surged, supported by the global import and consumption levels that were somewhat surprising. Those consumption levels are especially supported by China and Pakistan. And so wheat prices also have been pulled higher, you know, since some of the events in December. When I look at the current market, there are two major issues that are actually more supportive to the market. So I think we can see some more strength even beyond what we have seen recently. And the first one is that the European exports of wheat need to slow down. Europe is one of the major exporters into the wheat market, particularly into the Middle East, because they face a major feed grain shortage. And so we anticipate that a lot more wheat will be used for feed than in a normal year. And the second one is that Russia will actually be partially removed from the exports markets for some time in order to lead the recovery in domestic wheat prices that Putin would like to see and that we talked about just a second ago. So those two items can only be supportive to wheat values, and they will also be helpful to make the US and Canada more important in the export markets. So that leads us into the Canadian picture of wheat. And on the left-hand side is just a summary of spring wheat production. And you can see in terms of supply, we are actually higher than last year by quite a margin. We were at 31.8 million tons last year to about 34 million tons this year. In terms of supply, this is the supply number. Production, I should actually mention first, was about 26 million tons. Now, in terms of exports, we expect a very, very good year. Agriculture and agri-food is forecasting 19.8 million tons. I think we might actually be able to go a little bit beyond that. But because of the increased supply situation, given that export number, our carryout would actually increase by about 1 million tons. Now, year to date, we have done very, very well. As you can see on the top box, these are Grain Commission numbers. We are about 1.7 million tons ahead of last year already. That's 24%. So we've exported 8.5 million tons compared to 6.8 in the previous year. And you can see with the August to North exports by destinations who the drivers were. So we have done very well into China, Peru, Indonesia, and the US. These are some of the market drivers, and I should include into that Nigeria as well. The yellow cone depicts this ongoing crop year compared to the brown last crop year. So you can see, where we have made major headway in terms of exports. This is the same in numbers, and it shows you how we compare to the previous year. And also shows you which countries we made the strides in. If you were to prorate the exports to date into the full crop year, we actually end up with 21.2 million tons versus 19.8 million tons. So I think we can do a little bit better than 19.8. I don't think we'll reach the 21.2, but we certainly have set a very good early pace. So Canadian exports remain 24% ahead of last year's. I think we have a good chance to continue a good pace if we have continued access to the rail transportation, which has been tremendously important to have that extra capacity available. We have always said that if we can expand that bottleneck for the Canadian markets, we will actually improve our position in the export markets. And this year's example certainly seems to validate that statement. We are competitively priced, especially to go into the European markets. And so, I think that's a very positive starting point for the 2021 year. We are targeting about 7.25 for 2 years. That's very good values for the next sales. Just a couple of thoughts and challenges while we think about the wheat market. We have done very, very well this year, and we have shown that we actually can be competitive in the market. But when I compare farm values and Farm Vancouver values that trade, we still have about a $90 difference in value from farm to Farm Vancouver, which I think is fairly high given the cost structure. It does say that the exports depend on the rail car supply. As we get more supply, that actually narrows a little bit. And maybe as a thought, since we have been hearing from politicians a little bit earlier today, perhaps there's some value for the country as a whole to prioritize agriculture or renewable exports versus non-renewable and cheaper products like coal or even crude, in terms of utilizing our railcar supply to the best benefit and the best financial return to the country. As I said, just some food for thought. So to summarize the comments on the exports, we can say that the international demand is there on the wheat. In our mind, as a function of the higher railcar supply this year, keeping up elevator efficiency, and perhaps lowering the discrepancy between international prices and country bids to make it attractive for you to sell. Prices are very good, and they promise very good returns for next year as well, because when you draw down stocks across the board on wheat, if we can maintain the export pace, that puts you in a much better starting position for next year as well. I think throughout 2021, we will have some very good values to work with, both on oilseeds and grain products. So Chuck, I'm sorry, but I've taken a good chunk of the time, and I'll pass it over to you before we go into the discussion and question period.
Okay, thanks, Marlene. I will see what I can do now to cover durum and cover barley. So we'll jump right into that, and just make sure I get it up and running from the beginning. Okay, I think we're good to go now. Marlene has given us a good overview of what's going on in the wheat market, and so I'm going to try and cover a little bit more specifics with durum and then with barley. So for both crops, a look at what's happening this year, and then also what's happening or what could be happening for the next year. Just a quick note, because of the time considerations, some of the questions that have been asked, we may not have time to address them. So while Marlene was presenting, I was typing out some answers to some of the questions. Marlene may want to chime in with some of those as well too. But so if people want to look at the Q&A, you can see some answered questions within those questions. So just cover that as well too. So the Canadian durum crop, according to StatsCan, was quite large at 6.7 million tons. The good news, sort of good news, was that this was according to Sask Ag's crop reports, that about 86% of the crop was either a number one or a number two. Now I say sort of because frankly, having number one and number two durum doesn't really help you all that much in the export market because a lot of the buyers are not necessarily looking for those top grades anyway. So and we've seen with wheat and with durum that the grade spreads have been very narrow this year, just because there's been plenty of good quality crop and buyers didn't need to bid up for it. So this was the second largest crop on record, but again, a much different quality picture. Even though we grew that very large durum crop, the durum supplies really didn't move all that much from last year to this year, and that's because we had a much smaller carry-in. So really, the supplies were pretty much absorbed by that lower carryover, and so we're looking at a situation that on its own, just from a Canadian supply perspective, wasn't really all that heavy in 2021. In other durum producing countries, what you have is you had smaller crops in both Mexico and in the EU. So Mexico is an exporter, and the EU, and I'll show some slides in a second that talk about that, but that the EU also had a smaller crop. And so that's the bit of a picture that we have there. The larger crops were in Canada and the US. And so both countries have really stepped up their exports in the last couple of months, especially, or last few months, I should say, especially. So that's kind of a bit of a picture. When we look at North Africa, because that's a key importing region, Morocco has had a sharp drop again, 2 years in a row of very large declines in production. And Algeria has also seen year-over-year declines for the last 2 years, and even Tunisia was lower in 2020. And that difference in production isn't necessarily all made up for in imports. Sometimes they just consume less, so it's not a proportional increase in import demand, but still certainly very strong demand coming from that part of the world. We have been concerned in the past about Black Sea durum exports and bigger production coming from there. Well, as you can see in the far right of the chart, in the last few months, ever since their harvest, their 2020 harvest would have come off, exports from the region have been very, very low. And so really Kazakhstan and Russia have been very minor players in exports this year. And there's been a bit of buzz lately about Russia doubling its durum production. And it's important to keep in mind that that's over the next 5 years. And a lot is going to change over the next 5 years. It'll be prices that'll ultimately determine whether Russia decides to produce more durum or not. I think it was more media buzz than anything. So those 5-year plans typically get shelved and covered with dust and don't really have an impact over the long haul. So I'm not saying nothing will happen there, but I wouldn't get too worried about that yet. So as I said, the EU is a durum exporter, and at times they've exported close to 1 million tons or over 1 million tons. Last year, just shy of that. This year, so far they've exported 110,000 tons, and that's halfway through the season. So they export typically into North Africa. That's largely where they're moving product to. So very little competition from the EU. But then when we look at their imports, they've hit almost 1.6 million tons so far this year, which is almost double last year's pace, or sorry, an average pace. And so they've really stepped up their imports. So they're very, very tight. And I don't think, I don't think there's enough durum to keep them importing at the pace that they have been. So that will need to slow down. So that should be fairly positive for the remainder of this 2021 marketing year. In November, Canada exported, I forget the number now, 790,000 tons of durum. That's the most we've ever exported in a single month. And when we look, these are StatsCan numbers. The CGC data that we have for December already shows a pretty solid month there. In November, Italy imported 420,000 tons. And, we've often heard about Italy not buying. Well, they have been, and in a big way. So that's very positive. When you also look at this chart, the gray bars off to the right, that's what we have projected for the rest of the year. And that's not because demand is lower, but because that's about all we can supply, is about 500,000 tons a month for the rest of the year. And that's above average, but we also know that demand is above average. But it's still, there will have to be a pretty significant slowdown in exports over the next number of months, and simply because supplies are going to tighten up to that extent. So when we look at ending stocks for this year, what we see is, and it's probably a little overestimated for 2021. It could go even lower than that, but historically very low ending stocks. Exactly where that number ends up, I'm not going to quibble over that or argue too strenuously over that. But what it's saying is that we will have quite low ending stocks by the end of this year, and that's friendly for prices. When we look at some of the global prices that we've had, and we tend to think of durum as being some pretty good prices this year, and certainly they are rallying in places like Italy and in France and so on. And then the country bids have also generally been moving higher in the last little while. But when you look at, and I hesitate to do this, but when you look at 2014 to the left of the chart, we're nowhere close to those kind of levels. And so I'm not predicting we're going to get there, but I still think there's lots of room. It's not like we're at excessively high prices for durum. But there is one caution that I want to point out, and this is the seasonal price index for durum. So the black dashed line there shows that we have this harvest rally, which we've done, and you can see that prices this in 2020 have, in the calendar year, have really followed that move after harvest. But then they kind of turn sideways, and it's done that again late in 2020. And then what we see is that as we turn the corner into January and February, that's when prices start to fall off. And so it's a friendly outlook, but I'm still a bit nervous that that we could see a little bit of weakness. The other bit on this seasonal chart is that as we get toward July, there's always, or there tends to be a bump in seasonal durum prices, and so that's a fairly that could be an even bigger bump this year if supplies are all that tight. So I don't want to be runaway bullish, and I don't want to be negative Nelly. Sorry, apologies to any Nellies out there. But what we've got is it tends to follow that direction. Doesn't do it every year, and this year it probably will be minimal declines at best, but a generally friendly outlook. As we look at prices, as we look ahead to next year, this chart shows durum bids as a percent of red spring wheat bids, kind of like the average across the prairies. And so even though it's come off a little bit in the last while, that ratio, if you want to call it that, we're still at some fairly solid, durum is still performing fairly well against red spring wheat. And so what that suggests is that in areas where acres can go either way, to red spring or to durum, there's going to be more of a push toward durum. And so that's one of the factors we look at as we're looking at prices, acres for next year. We do this gross margin comparison, and I hesitate to always use these because people get fixated on the numbers on the bottom when they really shouldn't. What we're using is some fertilizer costs, some chem costs, seed costs, crop insurance, and then deducting that from some new crop bids that we've seen. And so there's a whole whack of other costs, all the fixed costs, a bunch of other variable costs that should be built into there. So we're certainly not predicting this as profitability by any means. But it's really the relative ranking of the crops that's important. And so what we see there is that durum is, you got lentils and canary seed, and this is in the dark brown soil zone. You have durum ranking fairly well within well, it's the top cereal within the rankings anyway. And so that, again, also helps us, points toward a likely increase in acres. So what we're expecting for 2021 is 7% acreage increase. And that would mean if yields drop back to the average, to the 5-year average, actually the crop would end up the same size as it was last year. So not a big buildup, and not a massively heavy supplies or by any means under that kind of an outlook. So that's under an average yield, and really, frankly, until we get well into the growing season, we use average yields as our guess because that's the best odds, frankly. So when we look at the balance sheet for durum for last year, or for the current year, and for next year, supplies may grow just slightly next year, but we also expect to see some strong demand even next year. And the EU is expecting, or has planted more winter durum acres already, but we think that there's room for exports to be strong again next year. So even if we get ending stocks, and again, these may be a little overstated, but even if we get ending stocks around 1.1 million tons, that's still not considered heavy. So it's not a negative situation. And of course, weather has the final say in all of those outlooks. So we can put out these outlooks, and then the weather, of course, does what it does. And this is percent of normal soil moisture as of the end of December. And there's a huge red patch over much of durum production regions in Saskatchewan, and well, not so much Alberta, but in Saskatchewan anyway. And so that remains a big concern. If we don't get more snow this winter yet, or if we don't get some good spring rains, there's a lot of concern, and not just for Durham, but for a whole bunch of crops. So just to summarize, and I'm rapidly running out of time here, smaller crops for this year in a lot of different areas. And so strong demand will remain in place for this year, and tight ending stocks. And those are going to need to be rebuilt with 2021 production. So seeded area will likely be up in North America, is already up in Europe. North Africa looks iffy. The rainfall still isn't coming in the way it should there. Dry conditions in Western Canada. So because we're carrying in very low volumes from 2020-21, we need a big crop again, and the weather is much more critical. So let's jump into barley, and I've got 5 minutes left to cover barley. The barley crop this last year went up a little bit, grew a little bit in size, but really that's a negligible change. It's not much of a difference. When we look at the production levels of feed quality cereals, so the lower grades of all of the different feed grain, or all of the different cereal grains, we see a massive difference from 2019-20 to 2021, particularly with feed wheat and even with barley, more of it going being malt quality. It may not go into the malt stream, but malt quality anyway. We also see that feed grains are being squeezed by lower imports of corn into Western Canada. And so those volumes, the last time we had a short barley crop, we were able to import a whole lot of corn from the US, and we just haven't been doing that. Even with a strong Canadian dollar around 79 cents, we still haven't been able to afford US corn, and I'll show you a chart in a second about that. Just in terms of the malting, this chart shows barley process. This is from the CGC, and essentially it's maltsters. And you can see that close to the end of last year, you see the COVID-related effects in that, where that red line dropped off. But what we've done now is so far this year has largely been at average levels. So we've mostly recovered. So that's positive news from the malt side of the business. In terms of barley exports, we exported about 430 some thousand tons in November, a very, very good year. I put okay in quotes, but we are heavily reliant on China. Last year we were shipping a lot to Japan. This year, Australia is going to start taking more of that business. So we're going to be even more heavily reliant on China, which is great for volumes, but it's still a little vulnerable. And again, these gray bars don't mean a drop in demand from where we are now, but that's about the maximum that we can do given supplies that we have. This is what's happening with Chinese barley imports. So for the last 3 months, they've imported well over 1 million tons a month. And so they've been taking big volumes from Ukraine the last few months, also from France, and then Canada is in yellow in those bars. But what's happening is Ukraine is essentially sold out of barley. French supplies are dropping too. And of course, Australia has essentially been locked out of that business with an 80% import tariff. So even if Chinese barley imports drop, they're still going to need large volumes from Canada. So the demand is going to continue through the rest of the year. So our barley ending stocks, again, low, and again, these may be just like Durham. These may be overestimated, but certainly historically tight barley ending stocks for the end of this year. Here's what's happening with prices in Lethbridge. And so what I was saying before is we simply can't afford US corn. These are converted to Canadian dollars. Corn prices are still just taking off, and they're pulling feed barley prices higher. Domestic feeders are either competing against the export channel or they're trying to outcompete US corn and or find alternatives, and it's just a very, very difficult situation for feeders. So feed barley prices are being pulled higher, and that in turn is forcing malt bids higher. So malt has to go higher, or else some of that some of that barley that's in bins may just end up disappearing into the feed channel. So these are average bids at elevators, which are lower than the Lethbridge market, but you can still see that those prices have been, the feed barley prices are what has been pushing malt higher. And the very narrow malt feed spreads that you see in Western Canada, not just the thing here, it's also happening in almost every market because the quality of the 2020 crop was fairly favorable. So for this next year, barley acres, in spite of the strong feed barley prices, the malt bids are okay, but they're not fantastic. And we just have extremely strong acreage competition, which is a great situation if you're a farmer. But canola is really competing heavily. Red spring wheat will probably be the loser this year. But Durham as well, and the pulses are looking fairly favorable as well too. So a whole bunch of crops are looking good. So I don't know that we can really move the needle on barley acres. So barley supplies next year could actually decline. Again, this is based on average yields, so on. So when we look at production, next year's production, if we drop acres just a little bit and drop back to an average yield, suddenly supplies are going down even further. And that will force exports lower in 2021-22. We just won't have the supplies to do more than that. So if China remains a buyer, that will certainly be a factor. So just to sum up, for the barley market, China is the driver for barley and for corn, and there are few alternatives. So expensive US corn isn't working in Western Canada, so we'll have low ending stocks. It's going to be hard to buy more acres without stronger malt prices, in my opinion anyway. Other origins will plant more as well too, so that will help alleviate some of the global supply situation. But getting favorable weather in 2021 will be even more critical than usual. And that's it. Oh, I'm 1 minute late. So anyway, I'll turn it back to the moderator now, and hopefully we can, I don't know if we still have time for questions or whether we really have to move on.